Excellent. Thanks for having me on the program. My name is Guy LePage. I'm an Executive Director of ASX-listed Conico. We are a mineral explorer with projects in Greenland and in Norseman in Western Australia.
Guy, thank you very much for the introduction. When I last spoke with Conico, I spoke with Tom. What's your role? How long have you been associated with the company?
Good question. About 15 years. It feels like 50 years, but only 15 years. Taken a more active role in the last 12 months as we've sort of refocused from Greenland onto the Mount Thirsty Cobalt Nickel project.
But you're not full time on Conico. Explain what your other hat or hats are, please.
I'm a non-exec on a board of Mount Thirsty Mines, which is a rare earth explorer in the southwest of WA, and I'm an executive director of Capital Group, which is a stockbroking firm based here in Perth, focused on natural resources.
And that, because we were speaking just before line, and but before we came online, and we've got to some degree a relatively similar background in that I started in exploration geology and then ended up as an analyst, and the roles evolved from then on. And you had a similar trajectory. Could you just kind of outline that as well, please?
That's right. I had about 10 years as a exploration and mining geologist in West Australia, South Australia, then Canada and the US for a few years. Predominantly sort of base metals, gold. Then moved into mining analyst role, sort of late 90s, then into corporate finance in early 2000s before we set up the Capital Group in about the middle of 2002. So been doing similar sort of things since then.
The reason why I asked that is because when one looks at a company like Conico with a portfolio in Greenland and an asset in Australia, with your background as a broker and as an analyst, and having seen hundreds of projects and thousands of projects and companies over the years, it kind of gives you a perspective on where the company is. It's got a market capitalization of $12 million. Could you just kind of, within the context of your kind of day job at Capital Group, kind of describe where you think Conico is?
It's about half time after a bruising encounter with the British Lions. We've got a little bit of a bloody nose from Greenland, which is still highly prospective, but it came with a pretty big budget, and we ran that for sort of 3 seasons. Had sort of technical success. We didn't necessarily downgrade the prospects. We didn't get the big hits. It was a big sort of cobalt nickel, Norilsk, Voisey Bay, Sudbury, that type of sort of big scale play, big targets, lots of good geochem, lots of good geophysics, but we were always going to have to hit something big in the first year or two, otherwise the market will lose interest. And unfortunately, the stock ran to 10 cents on huge volume, got 100 mil market cap. We sort of pulled back from Greenland. We then had some interesting PG results right on a tenement boundary by a company called Galileo Mining, who had the ground to the north of the Mount Thirsty joint venture with Greenstone. That's proven successful for Galileo, although I think their results are a bit low grade for a PG. They're in that sort of, if you convert them to gold equivalents, in that sort of 2 to 3 gram range, which is not really, I think, going to work. But we had a pretty good run last year, but that mineralisation didn't trend onto our ground. So we've really reverted back to looking at the cobalt nickel scandium potential on the oxide, and look at trying to work that up, given the sort of interest in cobalt nickel and obviously batteries and ability to make sort of precursor cathode material.
Okay, and your relationship with Greenstone, that is it 50-50, and who's kind of doing the day-to-day management of the project? Is it Greenstone?
Greenstone's taken more of a role the last 2 years. It's Chris Hansen, who's a geologist from New Zealand, has taken over the role. He's sort of got a new team around him. He's become a lot more active, which has been good. He's quite progressive in his thoughts on the project and quite enthusiastic. So, that's been a pretty strong relationship we've built with him over the last 2 years. And he's pretty keen to sort of move the project to the next level.
And does that mean this is how this works, that you can be an executive director of Conico, but kind of busy with your RM Capital work, because with Greenstone, with your Greenland projects, effectively now a data bank that you can trade, perhaps to get an earn-in partner for a company that wants to invest in the longer term exploration play there, and Greenstone doing the day-to-day kind of executive management of the technical aspects. You've effectively got a relatively light touch role in the management of Conico.
Well, to an extent, we're a bit understaffed. I mean, really what we're looking to do in the next 6 months is put a new team in to run the Mount Thirsty joint venture, following a spin-out, hopefully, and another capital raise. So that would probably see Greenstone and Conico spin it out and distribute the shares in the new vehicle to the respective shareholders, and put a new board and a new team in place to try and move it up from a scoping study level, which would hopefully have that finished in late June or July this year, ready to move into the pre-feasibility stage.
When you talk about a spin-out, it's kind of the taking the 50-50s and effectively putting a new company around Mount Thirsty. Is there any part of you that thinks, we could just fold in Conico into Greenstone and actually just create one company there?
Well, we possibly could. I think Greenstone's busy with its gold assets. They've got a pretty active gold exploration program around the Coolgardie region. So I think they would rather have, because it's a different budget, I guess, and the potential capital expenditure on Mount Thirsty is going to be on the higher end. So it probably doesn't fit with their gold assets. So I think they would probably prefer to see it sort of spun out into a new vehicle.
Okay. That makes sense. And tell me about the recent changes that you've done on Mount Thirsty, because you did have a kind of a relatively small cobalt resource, but you've kind of increased that by adding in different styles of mineralization and kind of different tonnages, different metallurgy.
Yeah, we have actually. What we've done is a bit of recent history. We did a PFS based on an atmospheric leach, and I thought the results from that were pretty average, to be honest with you, given the recoveries of nickel were about 20%, cobalt was about 80%. So what we've done is looked at the project using high-pressure acid leach, which used to be a bit of a dirty word, 20 years ago, but with the new generation HPAL plants up in Indonesia going extremely well, we thought that might be a good time to revisit it. So we've run a sort of desktop study, I guess, if you'd call it, on HPAL and rerun the resource numbers at Mount Thirsty. So the resource has gone from 29 million tonnes to about 62 million tonnes, I think, at a slightly lower grade, but we think that the HPAL should be able to mine grades down to sort of 0.06 cobalt and, down to sort of 0.4, 0.5 nickel.
0.4, 0.5. I thought quite a lot of the grade of the nickel was lower than that. Or I thought that was
well, the average grade in that 66 million tonnes is it's 0.06 cobalt, 0.43 nickel, and 0.45 manganese. There's quite a bit of material in that 0.6 to 0.8. So, I mean, part of the scoping study that we'll do, we'll look at optimising and maybe doing a little bit of high grading in the first for the 5 to 7 years. I mean, fortunately, with the new HPAL projects, they're ramping up a lot quicker than the old generation. 3 to 4 or 5 months they seem to ramp up as opposed to 1 to 2 years. So hopefully that should make a bit of a difference.
What you've just done this? You've just done the kind of the desktop study on these kind of 5th generation HPAL plants. And to me, I mean, I've still got the 20-year-old image in my mind of Murrin, so bad they built it twice, kind of thing. High pressures, corrosive acid, leaks, just capital blowouts, and never reaching nameplate capacity.
Yeah, all of the above. Beerlong, Cores, Murrin, Ravensthorpe. I don't think anyone actually wants to go back and work out the cost overruns because they'd probably have a nervous breakdown, but they were significant. But if you look at the new generation, they seem to have ironed out a lot of the bugs. They seem to be coming online quicker. The Chinese are building a lot of these in Indonesia. So it seems to have evolved. Certainly, if you talk to Simulus, who are the consultant on the scoping study, they're a lot more optimistic about the performance, not only the cost of these HPAL plants, but their performance and, the downtime, redundancy. There's a lot of operational efficiencies. I'm not a process engineer, but speaking to them, it's a different generation. Ravensthorpe's now making a lot of money. They're beneficiating 0.7, 0.8 gram, percent nickel, up to sort of 1.2%, getting good recoveries. Seems to be operating after a lot of pain.
If I wanted to watch, kind of monitor the progress of one of these new plants, what company should I, watch, and just in terms of kind of monthly or quarterly performance? Is there anything I can follow?
It's pretty hard. It's pretty hard because if you look at Vale, some of the Chinese, Indonesian operations, it's pretty hard to get reliable data. But you've got obviously nickel resources that are listed. That's probably the one to go and. NIC is the code.
Oh, so that's probably a really original name there. There we go. Wonderful.
Yeah, that's right. That's probably the one that would give you the best idea. They're reporting on about 3 to 4 operations there. So, and we've got a lot of the cost data. We're sort of looking at it. They seem to be running pretty well. So I think I'm a bit more confident about. That next, being able to execute something at Mount Thirsty that's a bit more efficient than some of the old ones that were built here.
And what's the kind of mineralogical sensitivity, or does it not really matter? If you're melting rock, you can get the nickel out.
Well, I think, we've moved from atmospheric to high pressure acid leach, so we're going from, 80 degrees south to 800 degrees C. The problem with the laterites is you need a lot of energy to break down that lattice work nickel. So, that will account for getting the nickel recoveries up from 20 to 90%, cobalt up from 80% to the low 90s. So that will make a difference. The scandium we've identified, we could make an oxide out of scandium. That looks like it could be 20 to 30 grams a ton, so that's $20 to $30, maybe $40 a ton. And the other opportunity is to make a precursor cathode material, which trades at a 50% premium. So there are a few of the sort of enhancements that we might see out of the scoping study.
And when would the scandium come out in an HPAL process?
Well, I couldn't tell you specifically, other than I would say it's come out in the same concentrate. It's a matter of separating out those concentrates, before you get to the precursor cathode part of the plant. So it wouldn't be a lot different to making a nickel cobalt hydroxide, I wouldn't have thought. I mean, we're flexible on what sort of product we're going to make. I mean, we could make a hydroxide, but yeah, the enhancement of the economics are really through making that precursor cathode material.
And the manganese is it,
well, that we could make a manganese sulfate. That's a possibility, or we could the manganese could go into the precursor cathode material, which is sort of part of that PCAM product.
Okay. And so this is all going to come out in a scoping study, or when is that scoping study due for kind of publication?
Hopefully late June, early July.
Okay, and so what I'm hearing here or reading is that you're going to use that scoping study as your launch pad for a standalone Mount Thirsty related company.
Yes, yeah. So I think do the scoping study, do the book build for the spin out, hopefully get a cornerstone or an underwriter in for the capital raising. Yeah, we might raise anywhere from sort of $5 to $15 million Aussie, depending on how things are looking. So that's a sort of realistic outcome. Yeah, we're fairly optimistic we'll get a good number out of the scoping study. So, but we're going to need to see a good set of financial metrics as well. I mean, putting something out with an NPV of 400 million and the capex of 1.2 billion is not going to cut it. So we're going to need to see some pretty good numbers.
Yeah. And in terms of your cash position at the moment, have you got sufficient budget to cover the scoping study, or sufficient treasury to cover the scoping study, and then kind of give you a few months more beyond that?
That's about it. Yeah, we're probably right till maybe September, October, November. But yeah, we're running it fairly tight at the moment. So yeah, we'll certainly be raising money this calendar year. That's for sure.
Presumably, one of the key variables in this is going to be the nickel price, and that's been whipping around all over the place, and there's kind of a bit of weakness at the moment. How do you see and certainly in the junior resources space, it feels very cash constrained. I don't know where you're sitting at, but where I'm sitting, it feels pretty difficult. What's the mood in the market that you're seeing in terms of both nickel and appetite for these kind of capital raises?
Look, there's still appetite. We've been pretty active on the stockbroking side here, although we're raising smaller amounts of money at lower prices and there's less liquidity. So it is pretty tough, I think. I think there's still, if you've got a project of scale, you can still attract money. And there's certainly interest from the end users in these sort of projects, and from the IGOs and BHPs who look at sort of take a longer term view. But the nickel market, interestingly, is going to surplus next year and the year after, probably mostly out of nickel production out of Indonesia. So if you're a believer in HPAL, you probably will see that oversupply of nickel coming in a bit more softness, which is probably already priced in. And, and cobalt hasn't had a great run either, to be honest with you. That's back at, $35,000 a ton. Been a bit of oversupply and a little bit less usage in batteries than we probably thought. But fortunately, the Australian dollar's sort of taken a bit of that commodity price decline, and we've had a 15% drop in the A dollar, so that sort of helped.
Yeah. Okay. Interesting. And if I recall that there's some kind of lithium pegmatites as well that you drilled a few years ago that kind of have come back on the radar screen as well.
Yeah, they did, and then went off the radar. Didn't really get a lot of joy. There was an old sort of lithium mine. Old tantalum mine, sorry, close by. But yeah, not a lot. I mean, we've tested a lot of the hard rock potential on our ground. What we did get out of the last round of drilling, though, was the scandium, which hadn't previously been assayed in the top 50 metres. So I think that'll probably be the next focus, to go and drill the scandium, add that to the resource. And that'll be something that'll come out into the pre-feasibility study. We're not going to look at that in the scoping study because we can't bring it into a JORC resource, but that's a bit of upside. But be like the hard rock potential, the deeper hard rock PGE potential in the lithium, I think we've tested on that tenement.
Okay, so when you talk about the scandium, is that from the on the Mount Thirsty resource itself? I mean, can you go back and either resample pulps or coarse rejects, or possibly even existing core?
We've got some pulp left. A lot of them have been, because a lot of the drilling's quite old, so we're going to have to go and re-drill a bit of it. It's probably a discussion with the resource guys who are doing the modelling as to how much they want us to re-drill, or whether they can see some correlation on, a more limited drilling footprint that they're going to allow us to use and project over the deposit. So that's something we're yet to sort of resolve, but it will take more drilling. And there'll be another round of drilling anyway as part of it, if we move to the feasibility study to upgrade more inferred into indicated.
There's also, from one of your recent cross sections, there's kind of a big open section off to the I think it was to the west, or maybe it was to the south. Maybe it was just it was the left hand side of the page. There's kind of a big untested area. Is that part of the
west? Yeah. There's a few gaps in the resource and that's one area that needs to be tested. The resource gets a little bit deeper out to the west, so I'm not quite sure. We'll probably have to do a bit more modelling to see how much more drilling we want to do in that area. But there are a few holes in the resource and a bit of infill, particularly now as we've lowered the cut-off grade from quite significantly. So that'll open up a few other opportunities to infill and expand the resource.
And if an investor was looking to kind of come into Conico, is surely the best time, if you're kind of going to buy into the Mount Thirsty resource, surely the best time is to wait until the spin out?
Yeah, probably. I mean, at some time we'll do a spin out. Will be X entitlement. How much lower? I mean, the stock's been under a bit of pressure, generally from the market, not obviously through not seeing that extensive Galileo's mineralisation onto our tenement and the hangover from Greenland. We've sort of been hit. So I think we're probably in a sort of bottoming phase with the stock price, and probably the junior end of the market, I think, sort of bouncing on the bottom here.
Slightly curious about your comments about the nickel market. You kind of see that going to surplus. Do you feel that kind of going to be pressure on the nickel price during 2024? Is that what you're saying?
Well, I think the market, whether I'm right or wrong, is probably looking 6 to 12 months ahead. So we've seen a pretty significant hit on the nickel price anyway. I mean, there is a bit of risk in ramping up H-power production in Indonesia in particular, but there seems to be enough foreign investment into Indonesia to make that happen. So whether we see nickel come off it a lot more, I'm not really sure. I mean, the problem with a lot of these projections, as you'd know, is that they've been wrong on both the up and the downside, in particular with iron ore forecasting, but nickel has been pretty tricky as well. So, the demand side is looking a bit softer with China and the economic news coming out of there. So, look, right now, there could be a bit more downside in nickel. And if there is more commodity downside, I think there's more downside in the A dollar.
Right. Okay. Good. Well, in terms of news flow from Conico, so are you going to put anything out in between now and the scoping study, or is that kind of the main target for the kind of I mean, here we are in kind of...
Well, we've probably got a few more scandium results and nickel and cobalt results in that last phase of drilling. We might have a little bit of sort of engineering met data to put out. The major news will be that scoping study, which is only 6 to 8 weeks away. So we're hoping that's going to put Mount Thirsty back on the map. scoping studies I've never been a massive fan of because of the, uncertainty, plus or minus 50%, it could be worth nothing or it could be worth a lot of money. In this case, I thought it was important because we've only done one study in the last 15 years, and that study was underwhelming. So I thought we had to actually put something out to give us the confidence to actually go and raise money for a PFS. And hooking up the likes of, the engineering, the Met consultants, Simulus, who do have, current knowledge of and are working in Indonesia on H-Power, gave us a bit of confidence that that was the right thing to do.
And the world has changed very much in 15 years in terms of process engineering, kind of reagents, a whole variety of things, and not least energy costs. Yes, there's been inflation, but equally there's been a commodity price shift as well. I mean, nickel prices of $25,000 a ton are very different to what they were even a few years ago.
Yeah. I mean, it is a different world. Obviously, the economics of this project look very different, in particular the precursor cathode material, which sells a bit of a premium. And there are risks, obviously, in going down that pathway, but the reality is, if this project's going to be developed, it's probably going to require a big partner. Now, whether that's an industry player or obviously we've got the rise of private equity, that's another option, who are obviously getting more active in mining projects. So there's, I suppose our job is to show what's possible on the project and what makes sense from an economic point of view. What product we ultimately produce might be determined by, the partner who comes in to help develop it.
First up is the creation of a new company, the spin out from outside of Greenstone and Conico. You're presumably not speaking to large scale or kind of industrials or partners or PE for that exercise, are you? I mean, you still considering this as kind of a junior mining enterprise for the time being?
Yeah, it's more sort of small institution, family office, wholesale retail investors, that sort of thing. So more your sort of smaller end of town. But we have had approaches from some bigger players who are looking at the project, but it's probably a little bit early for to get those sort of groups. And I think they probably want to see a PFS completed first before they dig their toe in the water.
Good. Guy, thank you very much. Sorry, I've got a very noisy cock outside, so to speak.
I hope he wasn't put off by the commentary.
No. Just a bit hormonal. It's that time of year here. Good. Well, good luck with the scoping study, and look forward to seeing and hearing the results of that.
Great. Thanks, Mel. Been a pleasure.